there have been a whole host of changes in the retail bond market. I'm joined by Marshall Nicholson from Knight BondPoint. Marshall, can you tell me what's going on in today's bond market?
Well, from a retail perspective, I would say it's probably never been a better time to be an investor in the bond market, especially when we look back over all the changes that have taken place over the last 10 years. Much of it's driven by technology, enhancements that have come into the marketplace. Also regulations. The regulators have been very friendly to the retail investor as far as trying to bring transparency from a post-trade perspective, and that has helped the retail investor find more value in the bond market. And in addition to that, the competitive pressures that are taking place within the traditional roles that bond market participants played has also opened up new opportunities for retail investors.
There's been a lot of talk of late about shrinking liquidity within the bond market thanks to the cost of capital. People are holding a lot less of the issuances.
Right.
I mean, where does that come in today's market? Where do we talk about, is that being driven by regulatory change or is that driving regulatory change?
Well, I think that it's driven by regulatory change because certainly the cost of capital, and warehousing risk is, makes that more prohibitive in the past. So as a result, you've seen dealer balance sheets or inventory shrink. Right. But at the same time, when you look at a retail platform such as Knight BondPoint, we actually have more liquidity on the platform than we've ever had. And
is it all sizes? Is it all sizes of notionals, or is it sort of more the smaller $100,000 to $1 million notional? We're talking $1 million to $10 million, $100 million.
Absolutely. I mean, we really focus on the what we call the micro lot and the really smaller round lot. So the sweet spot of Knight BondPoint is for under 250 bonds. But to give you some sort of idea of the type of liquidity that's on the platform, if we look across all products, today we would probably have in excess of 175,000 live bid offers that are typically very readily accessed by retail investors and firms that are servicing retail investors.
We're seeing a significant investment these days in technology around bond trading. We're seeing a lot of investments in crossing platforms, crossing trading networks, electronification of the marketplace. Where do you see that going over the next 6 months to the year? Are we going to see that trend continuing?
Well, I think you will see that trend continue. Again, it's kind of responding to that the technology is available. I think when we look at it from an industry perspective, the fixed income industry in general has probably underinvested in fixed income technology, and now they're playing catch up. That makes a lot of sense when you look at, say, something like fixed income flows into ETFs and the mutual funds, when we look at overall bond trading activity according to Trace or to the MSRB. So, I think that you're going to see the technology come into the place with new trading platforms. I think you're also going to see some vendors that had historically looked at fixed income in a somewhat myopic view to take a more broad approach and look to solve problems for their clients, and that could be on the order management side, on the EMS side, right? So it becomes almost like a equivocation, if you will, of fixed income.
Where do the regulators stand on all this? Have you had a chance to sort of interact with them and find out what their opinions on all the electronification of the markets are, and sort of the increase or decrease of risk?
Yeah, absolutely. I mean, when you think about it from a regulatory perspective, they typically get very interested in trends that are taking place that impact retail investors, and you really just need to go back and look at, say, the FINRA exam priorities for the last 4 or 5 years, and a lot of it where fixed income was always not included in any kind of exam priorities. Now you're seeing it front and center. You're seeing the Securities Exchange Commission start taking a look at bringing in new protections for investors, right? And so if we think about what it is, Commissioner Elise Walter did a very big study on the municipal bond market, and the municipal bond market is very heavily trafficked by the retail investor, and as a result of that, you're seeing that they want to bring in more transparency, look at pre-trade transparency. What does that mean to the marketplace? Commissioner Gallagher recently did a speech at Georgetown University when he talked about the corporate bond market and the need for additional transparency, moving beyond Trace from a post-trade into a pre-trade, and now you're starting to see firms such as like Benchmark Solutions would be a good example of someone who is getting out in front of that and being able to bring new types of pricing mechanisms to the fixed income market.
Well, Marshall, I want to thank you very much for joining us today, and please enjoy the rest of your TabbFORUM experience.
Thank you very much. Thanks.